Possibly my favorite is withdrawing cash and parading it, saying that you made it in trading. That's where you get it from. Prop movie money store. There's $1 million on sale for $450. That's where they get it from. And of course, when you wrap all of this up together, the IB agreement, the no regulatory history, but telling you they're a professional trader when they're actually a retail trader, the manufactured backstory, the manufactured trades and deception practices that they engage in, and the lifestyle and social media posts. Of course, the cherry on the top of the cake is the reason why they do it is because they want to inspire you. So you can one day be like them. So you open a trading account. 20 days later, you're gone. Congratulations. But there's other areas of trading infrastructure where IB agreements are very important. Trust me when I say this. IB agreements are everywhere in trading. They're not just with educators. They are everywhere. They just work in slightly different ways. So they're in managed programs, automated or algorithmic managed programs, social trading, and with online forums and information vendors. Let's start with managed programs. So there's a difference between a sophisticated investor and a retail investor. Retail investors are usually under $500,000 qualified. Sophisticated investors are over $500,000 qualified, usually with industry experience. So there's a gap in the market between retail traders and funds, where sophisticated investors invest in hedge funds, because hedge funds will only take a minimum of $1 million, $2 million. And you first have to be qualified as a sophisticated investor. Retail traders can't invest in them. So what do retail traders invest in? Oh, this infrastructure that is supposed to look like hedge funds, called managed programs. So you have these guys who are managing retail accounts where you give them money to trade. They've all got IB agreements with the brokers, every single one of them. So there's a conflict of interest. And what tends to happen? 90% lose money. Why? Because when their managed account goes up in value, they churn like crazy. They trade, they trade, they trade, they trade. And then the commission goes in their back pocket from the brokerage company as a rebate. And when they're down, they just churn less. So it's a churning mechanism. What about if we automate that? So we take away the human and we say, all you have to do is put money in this trading account, and every time this particular account trades, you do exactly the same trade. So it's automated. So there's no human managing it. The human is managing their own money, and you're just copying their trades. What about if we automate that? Now, the way that's set up is you have what's called a master account at the brokerage company, and then you have hundreds of retail traders who want to outsource their trading to somebody who's supposed to be good. What's happening there? Well, the guy with the master account has an IB agreement with the brokerage company. So every time the master account trades, or that guy trades, you automatically trade. It's the same thing. It's just two separate accounts instead of one. So what's happened there? Well, the broker has just outsourced pickpocketing to a machine. What about social trading? You've seen them, all these platforms where you go online and you see all these guys in weird places around the world with nicknames. Forex Master 179 was up 100% last week, based in Kazakhstan. The new master trader we're promoting on the platform. What's he done? He's turned $100 into $200. And you're about to give them 5, 10, 15, 25, 100 grand. They're never going to be able to manage that money. They've got lucky. Because they never advertise how much money they're actually managing, or very rarely. But something that's very, very, very rarely advertised and no one really knows the real truth about it unless you're inside the industry. 80% of their profiles are fake. The people don't even exist. They've created fake profiles, and the social trading platform is the brokerage platform. They own it. Or if they don't own it, they have an IB agreement with the brokerage platform. So what are you doing? Well, you're just doing the previous example. The broker has set up an algorithm that fires off signals through certain accounts, and you've set up a sub-account under a master account. That's all you've done. And then you're automatically copying the trades of that person. That doesn't exist. And all these guys get away with it because they're regulated in places like Cyprus and Malta, which are in the EU, but they can actually passport their regulation into London. So they end up with FCA regulation when they really shouldn't. And the regulators have actually started coming down really hard on them in the last few years. And there's been multiple investigations into the social trading platform sites. And they've actually found that 80% of them are fake profiles. So all the owners of these platforms for the last 2 years have actually been looking for an exit at favorable prices. Well done. You've just been duped again. IB contracts or brokers. Online forums. Do you think online forums were built for your benefit? So you can go on and chat to some guys who you don't even know about stocks, Forex, commodities? They're not built for your benefit. A lot of the profiles are, again, fake. And the forum owners, the companies that own them, are actually incentivized by IB agreements. Try clicking on the broker ads on the right-hand side of the screen. See what happens. New window opens, URL. Check the URL, what it says. It's an affiliate program. And they have an IB agreement with the broker that's advertising on their platform. We've downloaded many of the company's accounts to forensically go through them to see where they make their money and how they make their money. Because we see the URL links as affiliate links, and we know they're getting paid by the broker in commission. So you go on to Company's House, download the last year's accounts, the accounts before. How do they make their money? Mostly through marketing and advertising. And what is marketing and advertising revenue? It's brokers paying rebates on IB agreements. You need to understand how the industry works. So what's going to happen when you go on an online forum? Well, the online forums are in direct competition with trading educators. So what's their narrative? All education is crap. Well, of course, most of it is, because most trading educators have IB agreements where they get a percentage rebate. But there are real players in the vast minority, and we're one of them. But what are they going to push on their platform? They're going to diss all educators, and they're going to diss brokers that are not advertising with them. And they're going to push you with the inversion narrative, and they're going to promote forums that promote the inversion narrative and send you and push you towards the brokers. They'll even set up fake profiles themselves, and they'll call themselves, for example, veterans, as having been on the forum for 10 years and added lots of content to the forum that other accounts that are fake respect. So they're basically sock puppets. And they'll push you towards the brokers. So you think you're talking to a guy that's got a reputation that's good. It's a guy working at the forum. You need to be very, very suspicious of how all these guys work. There's huge conflicts of interest everywhere. So consider what you've been shown today. Just think about everything, how everything works. How the parameters of the industry are literally set up for retail to fail. The infrastructure was built for retail to fail, not for them to benefit. How hedge funds, pension funds, and investment banks are the largest payers of exchange fees. And exchanges need them to survive, to maintain the status quo. How investment banks in particular absolutely require dumb money to exist. And they enable the infrastructure by providing the credit, the financing to retail brokers.